Welcome back to the Wall Street Podcast. We are executing a deep dive today, focusing on a significant new research report. It's from UBS Securities Asia Limited, dated late September 2025. The title is China Internet Sector, APAC Focus, Changing Rhythm in Online Music Monetization.
That's right, and it really zooms in on China's online music players, mainly Tencent Music, TME, and NetEase Cloud Music, or NCM.
And the core view seems pretty clear. UBS sees major growth ahead.
Yeah, huge potential. But interestingly, not just driven by adding more users, the real focus is on getting more revenue from each paying user, ARPPPU.
ARPPPU, right. Average revenue per paying user. They're forecasting, what, a 13% compound annual growth rate for subscriptions just through 2029.
Exactly, a pretty punchy forecast, which is why, both TME and NCM are rated buy.
So what's underpinning that confidence? What's the argument?
Well, first off, UBS points to a valuation gap. They argue these Chinese stocks, TME trading around, say, 26 times earnings, NCM maybe 23 times. That's quite a bit lower than global peers. Think Spotify.
Okay, so they see room for that gap to close as monetization improves.
Precisely. And they highlight three key ways, three levers to boost that ARPPPU.
Let's break those down.
Okay, first, discount normalization. Right now, Chinese subscribers get a pretty hefty effective discount, something like 23% below the list price. UBS expects that to shrink.
Fewer deals, basically. Makes sense. What's number two?
Price hikes. The report flat out says the sector is, quote, under-monetized. They're actually forecasting a possible price increase for standard subscriptions.
From what to what?
From the current roughly RMB 15 per month up towards RMB 18, probably within the next couple of years. They point to global examples, Netflix, Spotify, successfully raising prices.
Okay, less discounting, higher base prices. And the third lever?
Premium offerings. This is about adding value beyond basic streaming. Think long-form audio, maybe podcasts or audiobooks integrated, better content generally, and tools for fan engagement.
Right, like TME's bubble platform, things like that.
Exactly. Things that can add incremental revenue on top of the base subscription.
Okay, let's dig into that third one a bit. These premium services, the add-ons, how much do they really expect them to contribute? Are we talking minor bumps or something more substantial?
It's framed as incremental, but targeted. For example, the report estimates that integrating long-form audio, maybe leveraging users from platforms like Ximalaya, could boost TME's ARPPPU by about 1.0% by 2028.
1%. There.
And then enhancing those fan engagement features like Bubble you mentioned could add another 0.5%, so 0.5%.
Individually small percentages, but I suppose they add up and likely high margin.
That seems to be the idea. Concrete incremental revenue streams beyond just the core music sub.
Now, switching gears slightly, another point often raised is China's paying ratio for music. It's historically quite low compared to other markets, right?
Definitely. The report notes leading platforms are somewhere in the 21% to 26% range for paying users versus total active users. In developed markets, you often see that figure north of 50%.
So a big gap.
Yeah.
What does UBS see driving that conversion rate higher in China? How does that gap close?
They list a few key drivers. One is simply the rising music paywall. As content costs and royalties go up, platforms have less incentive, maybe less ability, to offer vast libraries for free.
Pushing people towards paid tiers.
Right. Second, better content discovery and promotion. They specifically mention things like popular music-themed TV shows driving traffic and interest towards the platforms.
Makes sense. Tying's work.
And third, crucially, is the potential wider rollout of ad-supported memberships or very low-cost introductory tiers. We're seeing trials like RMB 5 a month. It's a way to ease free users into the paying ecosystem.
Like a stepping stone. Okay, so with everyone seemingly pushing towards monetization, TME, NCM, even ByteDance's Soda Music, how are they managing the competition? Is it a head-to-head fight, or are their strategies different?
There are definitely different approaches based on their current position. TME, being the established leader, seems focused on, sustaining that ARPPU, pushing premiumization, things like their SVIP tiers, long-term memberships, keeping the value per user high.
Holding the premium ground.
Yeah. NCM, NetEase, on the other hand, seems to be prioritizing user scale right now. Growing their MAU, their monthly active users, they seem willing to accept a slightly lower ARPPU in the short term to build that user base.
Scale first, then maybe optimize price later.
Potentially. And then you have Soda Music leveraging that massive ByteDance ecosystem traffic. They're starting from a lower ARPPU base, but their presence confirms that the whole sector is kind of moving in sync towards better monetization. It's competitive, but the direction of travel is similar.
Interesting dynamics.
So for you, the listener, what does this all boil down to? Well, pretty directly, it likely means an impact on your wallet if you're streaming music in China.
Right, those strategies we talked about, narrowing the discounts, the potential RMB3 price hike.
Exactly. It signals that the cost of digital music is probably set to rise, moving, somewhat closer to what people pay in other parts of the world.
Which brings us to a final thought. We see these platforms pushing for higher prices, following global trends.
Yes, but globally, especially when you adjust for inflation, total music streaming revenue hasn't actually surpassed its old physical media peak. And platforms like Spotify and Netflix are already bumping up against price sensitivity, price elasticity issues.
So the question is, how long can China's music platforms rely primarily on these price hikes before they hit a similar ceiling? How much headroom is really there before consumers push back?
Sure.
Something to watch.